What's up YouTube? My name is Uncle Smokey, and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say, I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt, and do your own DD.
What's going on, guys? Happy Monday evening. We're getting ready to come into the trading week, and this is going to be a short trading week as this is President's Day, and obviously there was no trading today. You were able to trade on the crypto markets, of course, and if you want to take a look, you can always, of course, look at the futures if you want to keep up to date on what the market may be doing in the very near future, i.e., tomorrow morning. And as you can tell right now, the Dow Mini is down, NASDAQ Mini's down, Russell Mini's down, S&P 500 Mini's down, all of them are down. And that's, of course, going to be on looms of the war. There's always going to be a market crisis anytime you've got war up and coming. And unfortunately, I don't feel like this is being handled the right way. I think there's some more things that should be being done to help evade this situation. And unfortunately, they're not happening. But I don't like to talk a lot of politics on my channel, so I'm going to stay away from that. Just know I'm not very pleased with the situation at hand. It's really frustrating the hell out of me, which it should with any red-blooded American out there, and really anybody in any country out there, because this is overall affecting the entire world. Now, with that being said, I want to talk about some other things that have been happening. I have not, first and foremost, I want to take care of this. I haven't been making a whole lot of videos lately because I've been taking a little bit of a break, getting my stress levels under control, trying to let the market do its own thing, just being with my family, doing things to help take my mind off of the overall happenings in the market. Because let's face it, other than a few short days that we've had recently, we've been seeing a lot of bludgeoning. So I've been doing some things to take care of my stress levels. The other thing I wanted you guys to keep in mind, I'm coming up to the spring. I've talked about this on my channel many times over. My son likes to play baseball, and we're coming up on that. Now, as of right now, it's not a for certain thing. We're still waiting to find out if there's even going to be enough kids to have a team, which that's unfortunate because COVID kind of scared a lot of kids away from doing group activities, and they're afraid to still come out in public. A lot of schools scared children with the way they presented some of this information. So right now, we're currently trying to get that situated. So I just want to let everybody know there's a chance that there might be a slight change in my scheduling of videos in the upcoming future, but not to worry. It doesn't change anything at all, just when my videos might come out. Alright, so back to all of this stuff. The U.S. Fed governor opens door to half-point rate hike in March. Basically coming out here, telling them what you can be expecting, half a point roughly, coming in the early March Fed meeting. We kind of all expect that. We do think the market has the half a point already factored in. Now, if they come out with a full point or even 3/4 of a point, I do think that you would expect to see a little bit of bearish movement on that kind of news, but it's going to be short-lived because, in all honesty, if you look at rate hikes in the past, the market has overall responded relatively well on the short term. Also, if you want to take a look at this one here, I urge everybody to go read this. Fed approves rules banning its officials from trading stocks, bonds, and also cryptocurrencies. This is a fantastic thing for the retail investor. This takes another one of the big players out of the factor that have the ability to short the stock, have inside opinions and things like that. There are inside trading knowledge, things like that. So that's just another step towards helping retail investors. But in the same exact breath, you come over here and look at this article on Institutional Investor. Will NASDAQ new extended trading close transform after hours trading? This here is very crucial, guys. This could be a very, very terrible thing. In fact, as far as I can read, it is a terrible thing for the retail investor. What this is allowing to happen is institutional investors will now be able to trade on the market for an extra 5 minutes after close at the NASDAQ close price. So whatever the price is at 4 o'clock at market close, they get an extra 5 minutes to close up any positions they have looming there in their order books. that is absolutely unfair to the retail investors, because as we know, in 5 minutes, they can completely short a stock to oblivion if it's not being looked at on the market. If we can't see it, what are we going to do? You know, there's going to be the chance that these guys are covering shares, and it will not affect the overall price action of the underlying stock. And that's not fair to the people who are invested in these companies that are looking towards these certain events to happen. This is basically giving them another out, another way for them to be able to screw retail investors, to be able to screw companies, screw stocks all the way around. It's, in my opinion, probably one of the worst things that could happen overall when it comes down to it. All of these other things, the Fed not being able to trade, the Congress not being able to trade, all those other things, that is completely wiped off the market, because this 5 minutes of algorithmic trading could be huge for these investors, these institutional investors, the big guys, the ones that we're basically fighting against. So just keep that in mind. If you want to hop online, you can Google it, the new extended trading close, and you can read the whole article for yourself. But with that being said, let's go ahead and move on to the stocks. All right, MMAT, MetaMaterials Inc. So the last couple of days we saw a little bit of a downturn, and again, that is on the news of the war. There's nothing we could do about that. Nothing has changed in the overall stock itself, the company itself. Nothing at all has changed. So there's no reason to believe that any of the downward pressure that we've seen is going to be coming off of any bad news off of MetaMaterials. They've put out no bad news. In fact, they've only put out a kind of a good news, and we're going to get to that here in just a little bit. So over the last couple of days, like I said, downward pressure, and on the 5-minute chart, it's not going to show you a whole lot of information because we take this as a long-term trade. Looking at the 5-minute chart is only going to help us see where it bounced off of in the intraday time frames. And as you can see, I did say in my last video, I would expect to see this pull down a little bit further, all the way down to that 168.5 retracement level right here. That's 50% retracement from the last major run-up. And it did. It bounced off it, respected it really well. As a matter of fact, traded against it for, I'll call it a couple hours, as a matter of fact. And again, good respect of that line. And I would like to see that hold that line throughout the next course of the couple days, especially with more war looming, more war talks. So again, you could see a little bit more down pressure in the markets, but if we can keep maintaining that level, or I would also expect to see, if there is more major downward pressure, to stop at this 61.8% retracement level, which is $1.61 in this area. If we can hold up in this area, we stay bullish. We stay in our trend. Now, I do know, as you can see right there, but if we pull it out to the 1 hour, we have pulled down out of our upward trend a little bit. But remember, you've got a little bit of leeway, especially when the overall market is trending down. I mean, we're battling. If you go ahead and you look at your indices, you can see it. Let's go to the bigger ones. Here's the SPY. Again, down below that 200, pushing hard. Actually, again, showing you're pushing down below that trend line. So we did take a little bit of a bearish turn. Here's the Dow. Again, pushing down below that trend line, taking a bearish turn. NASDAQ, down below that trend line, taking a bearish turn. Unfortunately, war will do that every single time. So I'm going to take what I see in the overall trading over the last couple of days with a grain of salt, and know that there is a really good chance that this could bounce with a little bit of good news. All we need to hear is Russia isn't going to go to war. Ukraine was denied NATO, or whatever it needs to be done to be handled, this situation be handled, that would absolutely help the markets rebound. So when you look at it, and let's go ahead and make this bigger so everybody can see it. When you look at it, you always want to take that into consideration. What did the overall market do? And it did respond with the market. I would expect, again, to see it bounce off of these levels that we're at right now and get back up into this upward trend. We can handle this little tiny bit of a dip. We still did not make a lower low overall since the last run-up. We're right here. We're still above it. We're doing really good. I am in no way, shape, or form concerned about this movement. Like I said, I would even expect a little bit more of a movement down to this level. Moving out to the longer time frames, we want to take a look at all of our indicators. So hang on, let's go back to this one. So as you can see right here on our 1 hour, RSI is really low. MACD actually crossed over that signal line in the after hours and is holding above the signal line currently right now. Moving out to our longer time frame, let's go to the 1 day straight away. Make it bigger so everybody can see it. All right, so in our 1 day time frame, again, this is going to tell a huge story because this is a long-term trade. This is a long hold, guys. Now, can something happen? Can volatility pop, make this thing go north really fast? Sure, and I would expect everybody to start thinking about making a profit trade to try and recoup some of those funds that we've lost over the last several months. But at the same time, knowing that this could be brought back down. So just keep that in mind. If we start seeing skyrocketing numbers and you guys are feeling comfortable, no one's forcing you to stay in this trade. No one's forcing you to hold it longer than you need to. Everybody understands that people have different needs, different financial goals, and everybody has their own different price target because you've entered at different levels. So always feel free to take profits when you need to. Never take anything I say as a rock solid thing. I think this thing could go to $100 easily, no problem. But if it doesn't go there, I don't want anybody upset that it didn't go there. I'm telling you now, take profits when you're comfortable. All right, so anyway, like I was saying, in the 1 day chart, the one thing you want to be looking at right down here, MACD line is holding over that signal line still, even after the last couple of bearish days we have seen. As a matter of fact, it hasn't really hooked down much at all. RSI has cooled off quite a bit. Yes, that's fantastic. But the MACD itself has not moved down. That is great. We're still pushing up. The histogram bars are, look at this, still staying level. We are level across the top. I'm expecting for more volume to start pushing in, especially if we start seeing more of these conversions, more MMAX share conversions, more warrants being cashed out and exercised, more stuff like that. If we see things like that and it shows more bullish momentum from the actual insiders of the stock, then you're going to start to see big investors step in, more whales step in, the options chain will light up, all those good things. Speaking of options chain, let's take a look. So obviously we just came off of our expiration, our monthly expiration, and like I had said, there wasn't a whole lot of things happening in our options chain for the month of February. But let's take a look at March and April. As of right now, March isn't looking too super spectacular either, but April, on the other hand, is looking super juicy, guys. So in order for you to see any kind of movement in the options chain as far as a gamma squeeze goes, you need to have a lot of open interest in the options chain. And what you do not have in March is open interest in a lot of it. You've got some, not much, but it doesn't mean there isn't enough time for the open interest to build. But already in April, you're seeing a ton. As a matter of fact, the $2 strike, the $3 strike are already at 10,000 in open interest if you combine the two. And then once you start climbing above that, you've got 7,000 just above that, another 6,000 above that, 5,000 above that, and going all the way out to the $10 strike, you're at almost 8,000 in open interest. So as you can see, there are some very bullish bets happening in the April expiration time frame. And that right there is kind of giving me an indication that somebody knows something. Something could very well be coming up. Now, also keep this in mind. It doesn't need to happen all the way out in April. A lot of times you're going to see investors step in and buy a couple of months out because they want to allow for it. They don't want to allow for theta to kick in too hard. They want the delta to be able to come up so they can cash out, so they can make some money. So if they buy a low to mid-range delta and they're expecting some volatility and the delta climbs, they can make some money. And again, like I said, when you see an options chain starting to build up like this, very bullish. This is a great sign. To me, this makes me want to buy options out towards April. And that's one of the things you always look at. Look at the smart money. Look where the money's moving to. All right, so let's move on to the internet. So before I start talking about this right here, I want to get something out there because I'm looking at my notes and I just remembered this. So one of the things we want to keep in mind, one of the things that's going to send the stock north, and this is one of the reasons why I say MetaMaterials has its own short squeeze. First and foremost, you can look right here on the Ortex page and see that there's a lot of information here that's leading you to see the ability for MetaMaterials by itself to short squeeze. But you've got a catalyst up and coming, and that is earnings. So a lot of people are very skeptical about the earnings. They don't think that it's going to be what all of us meta heads have built it up to be, because they're not taking into consideration one major, huge factor. nanotech. A lot of people don't realize that the acquisition of nanotech allowed for our balance sheets to grow exponentially all by itself. Not to mention, and this is one of the things we brought up on the space calls, any of the contracts that are not under MetaMaterials Inc.'s name, that may be under Lambda Guard or any of the old companies' names, any of them at all. You're now at the time of year where they're going to rework contracts, and now they have to show up on the MetaMaterials balance sheets, not the old companies' balance sheets that would not show up on NASDAQ reportings at all. You would not see Q10s for any of this information because it has nothing to do with the information at hand. That's old contracts. They're waiting for all of that stuff to expire. So there's a very good chance that if there were any contracts out there that were in the old company names, that they have not shown up on any Q10s yet. No earnings, no revenues, or anything has been seen yet because they didn't have to be. This could very well be a huge, gigantic earnings to show huge revenues that could absolutely send this stock freaking skyrocketing north. And this is one of the key catalysts that I've been waiting for, I'm looking for, because of these key things. You've got the nanotech finances built into that now. And like I said before, if there's any old contracts, they're going to start to show up. Also, we're going to get to here in a minute, there's been some other news that has been brought to our attention that we're going to see here on Twitter in just a minute. So as of right now, what we're looking at on Ortex is 100% utilization still, 1.94% cost to borrow. The days to cover all of the shares on loan is currently sitting at 5.88 days. There is currently 38.96 million shares on loan, which is 15.82% of the free float. And according to the NASDAQ, there's 40.47 million shares out there short, which is 16.64% of the free float. Also, if you take a look down here, the security lending volume has picked up over the last couple of days. Those down days, if you see here, security lending volumes at 2 million on the day before Friday, so Thursday, and on Friday at 1.72 million. And honestly, our volume over those last couple of days, if you go ahead and look back at the stock, got to go to the chart. If you look here, you're at less than 4 million. You're at 3.7 million volume on Friday, and you've only got 4.77 million, so 4.7 million on Thursday. Honestly, the lending volume is starting to equal up to about half on Friday, more than half of the overall volume. Also, take a look down here. The current short interest is 40.97. This is estimated. I'm sorry. The current estimated short interest, according to Ortex, is 40.97 million shares, which is 16.64% of the free float. And also, the average number of days on loan has been consistently climbing. We're up to 48.88 days on loan, just growing and growing and growing, showing that these short positions have continuously held their positions out there long. They're not returning their shares. They're not covering. They're not doing any of those things. The small amounts of return shares you're seeing, scare tactics, maybe just they know what they're in for, they know what's coming, they're going to start sending them back. Also, the one thing you want to keep in mind is take a look at how the shares on loan has reduced below the short interest, the exchange reported short interest. We have dropped below the physical shares on loan, showing that at least somebody, at least one person out there does have synthetic short shares out there. There should absolutely be at least the same number of shares on loan that are short. I'm pretty sure that is a correct statement. Correct me if I'm wrong in the comments of this video. Of course, I always like to learn. I don't want to be incorrect on something like that. So if I'm wrong, I want to know so I can correct it in my next video. Moving on to the Fintel information. So Fintel showing we're 84.13 out of 100, which is 309 out of the 5,500 stocks on the short squeeze score. There's currently 200,000 shares available to be lent from a leading prime brokerage. Now keep this in mind. This is just one leading prime brokerage, and this could honestly just be a false number. This is reported to Fintel, to FINRA. So if the information is not correct coming to them, it wouldn't be correct on Fintel. Also, if you take a look over here, the short borrow fee rate's at 1.11%, and all the way at the top of the page, they're showing 9.13 days to cover. The one thing I did not get to show you on Ortex because there's no information here is the cost to borrow max on Friday. At one point during the day on Friday, I do believe it was right around 4% cost to borrow. On Thursday, we saw 9.5% cost to borrow. Pretty freaking amazing, if I do say so myself. If we keep on scrolling down here, we'll get to the final little bit of information we use Fintel for on this page, and that's the short sale retail volume, showing that the overall volume through the dark pools was over half of what our overall volume was on the open market. The FINRA volume was 58.55% short volume. And then there was also 61.63% volume, short volume across all of these exchanges. Now, if we go ahead and look at Chart Exchange, which is one of my favorite things to look at for the short volume, because they seem to have, I think, probably the best numbers. 62.25% of the overall volume was short, showing that we did take a beating from short positions. The one thing you want to always keep in mind, if the market's going to go red in any of these stocks that there is a heavy short interest and they know they're in trouble, they know that something's coming, they're going to keep trying to put it down there. They're going to keep shoving it down in the dirt because they want to scare investors out of their positions. They want to be able to buy those shares up to be able to cover their synthetic shares to show that they have them. And they want to buy them as cheap as they possibly can. Now, with that being said, the one thing you always also want to remember, short positions aren't going to cover. They're not going to close positions down here. They might return some shares, but they're in no fear, absolutely no fear of actually losing any money right now. If they're buying up your shares, it's so that they can cover them later on down the road. As of right now, they're making money hand over fist, no matter what, because they're well below their buy-in price. Short positions started buying their shorts way up here and started shorting it down. And then they did a little bit of coverage here to when we ran to 655, and then they bought more or started shorting the stock down, and they've shorted all the way back down to where we are now until we've seen that recent bounce. So just keep that in mind. They're not covering positions now. They're in no danger of losing any money whatsoever, and they won't start covering and closing positions until they have seen some losses. And that's going to take a long time. All right, so insider trades. As far as I know, we haven't seen anything. We're going to check it together. No, we did not see anything in the last few days. The last insider trades was that MMAX conversion from Thomas Gordon Welsh. Moving over to the institutional buyers and sellers. So we have not seen any other big institutional buyers step in. State Street was the last one to disclose any bigger position as far as it goes with the 13Gs. But when it comes down to the actual 13Fs, which is anything below 5%, but you have to have a $100 million, I believe it's a $100 million account or whatever it is. So basically institutional investors, they have to file a 13F. As you can see, you've got Goldman Sachs filing 306,000 shares. You've got GWM advisors increasing their position, or that might be a decrease. I think that's a decrease. Virtue decreasing their position. Now, Virtue is one of those gigantic companies that love to short the stock. Okay, so they have decreased their position by 76%, guys, disclosing current shares of 50,000 shares. That's still a butt ton of shares, though. The Dutch bank, Iron Bridge, I believe we covered the Dutch bank over, but Iron Bridge Private Wealth LLC, they're a new position, 126,000, almost 127,000 shares. So we got Goldman Sachs and Iron Bridge have stepped in and bought the stock in the course of the last couple of days. Fan-freaking-tastic. And then, where we got? Okay, so here's the sellers. Yeah, Virtue, Dutch, Manufacturers, Life Insurance Company. All those guys are sellers. And now, one thing you always want to keep in mind, red indicates closed positions. White is just a decrease. All right, so finally, on to the news. MetaMaterials Inc. They threw out this one on, what was this, Thursday, I believe? The 17th. Sorry, I'm getting my days all screwed up. It's President's Day. It's Monday, so I think that was Thursday. Anyhow, let's look. Yeah, okay. I haven't lost my mind yet. So on Thursday, they threw this one out there. The Banknote and Currency Conference of 2022. Obviously, I'm here. Wasn't going to make it to it. It was a joke, by the way, when I put that on Twitter. There's no way I'm going to pay $2,500 to go see this. I mean, this is cool and all, but that's outrageous. Anyhow, I suggest you guys just hop on to MetaMaterials.com. You guys can read all this information for you. But what this brought to my attention was, if you remember correctly, we had this pop up not too long ago. Everybody thought, it was the girl with the tattoo, or I'm sorry, the girl with the pearl earrings, or it was Harriet Tubman on the NTS Corp picture they put up here. Now, it has gone away since then, as far as it goes. Like, oh, here, I'm sorry, there it is. That's what I'm looking for. So this was the picture that was put up there. Nobody knew what it was. You could tell how we could think that this was Harriet Tubman, but now with this new information that we got right here, if you watch this video, you can see that it's a really good chance that it's actually the girl with the pearl earrings. As a matter of fact, on this video, you can see why it is. This is the picture, and if you keep watching this video a little bit, they'll show right here how this roll is actually a different color. See there how it's actually a different color as it's rolling out? You might have been looking at the negative print, what they used to physically print it onto the paper right here. That could have been what this is. And once the ink has been put to it, it changes colors. I don't really know. I don't know the science behind it. In fact, I've said it a million times, I'm no scientist. But it's cool to see how all that process works and how that kind of got uncovered by Brandon Nodnarb. Again, I've said it before. This guy deserves a follow from anybody out there. He uncovers some really, really cool stuff. Anyhow, so we're going to keep moving on. J-Bridge did put this one out there. Where'd it go? There it is. Okay, J-Bridge put this one out there. So this is one of the things, again, this is all speculation, guys. We do not know 100% any of this information, but tossing this out there for everybody. Tesla's Musk says new chip plant should make shortage short term. So this was September 24th, 2021. Yes, this is an old article, but it's very, very interesting, this article. I have not personally seen this myself. And what's interesting is new semiconductor plants that are planned or under construction, the global chip shortage that has pummeled the car industry this year should be short-term in nature. There's a lot of chip fabrication plants that are being built, Musk said. Take a look right down here. The demand is so high that suppliers such as BASF and MetaMaterials sit on full order books. Boom. Full order books. This is coming from Musk's article right up here from Reuters. So that right there is telling you, now this is an old article, but it's not that old. Telling you that there's a really good chance that MetaMaterials already got a bunch of contracts lined up and we haven't seen them because they're not in that name. There's a really good chance of that, I'm telling you guys. Now, moving on to the very next one. This is the online panel series through Microwave Journal. This is going on tomorrow at 11 a.m. I am off work tomorrow. I said that last week. I'm off work tomorrow. At 11 a.m., I am going to be going live, and I'm going to be on this as long as I can do this live. Once I get it up and running, I'm going to pop my live up and we're going to see what happens. I might pop my live up and we'll figure it all out together. I've never done a live coverage of any of the events on MetaMaterials with the exception of when I physically went to AWE. So I'm very excited for this. I'm sure this is going to be just, business as usual. He's probably going to get up there, give the forward-looking statement, give a standard presentation, and then possibly take questions at the end. So I'm just, again, I'm very excited. This is going to be my first midday live actually covering something MetaMaterials. Pretty pumped. I hope to see you guys all there. And with that being said, that's all I got on MetaMaterials. I'm going to move on to another ticker now. All right, so this stock here I'm going to give you is going to be my big play of the week. I'm actually looking to step into this one because of what happened over the weekend. So this is DWAC, also known as DWAC. Everybody here knows what this is. This had a major catalyst happen today on President's Day. Of all the days in the world, for Truth social media to actually open up. I downloaded this thing first thing this morning, and I'm already up and running with Truth social media. In all honesty, with that hitting, it is going to absolutely send this stock soaring. So let's go ahead and talk about it real quick. Now, this is a short squeeze stock. This has been one of the ones that I've been put on the short squeeze list, and it happened very, very fast. This has not been around very long. Let's pull this out to the one-day chart. So I've been charting this ever since day one, and that is no joke. Since this thing made that run up all the way to 175, I drew that Fibonacci retracement up and have followed it all the way down. I've made a little bit of money off the stock here and there playing the bounces because, like I've said, when you follow a Fibonacci retracement, if it catches at certain levels, that could be a bullish indicator, and you can utilize that as bounce points. And this is also going to give us a great opportunity for us to show what a Fibonacci extension is again, to show where you could potentially take profits in the near future. So again, this is going to be one of those plays that I'm going to be jumping in and out of. I'm not going to be in it very long at all, and I'm going to be playing the options chain, which we'll get to that here in just 1 minute. But if anybody else wants to play the ticker, here's how I look at that. So first and foremost, I'm going to come into the, not that close, 1 hour time frame so we can see what's been happening. As you can see, the 50-day MA, or I'm sorry, the 50 MA, this isn't the day, this is the 1 hour time frame. The 50 MA is currently hooked over the 200 MA, which is a bullish indicator. That is a cross indicator, but it did not respect it well. But what you're also going to notice, again, with a catalyst, we're not too far off from that center line. What I'm hoping to see happen is Monday morning, or Tuesday morning, which is probably what is going to happen, is it's going to bounce off of this 200 line that it's currently sitting on and shoot straight north. And I'm not joking, straight. More than likely up. What I'm really hoping for is to catch this thing on the options chain. If you look at the options chain, for this coming up expiration date, all the way going deep in the money. Now, I'm talking deep in the money, guys. This is where the options are going to get cheap. But if we remember correctly, this thing can run $100 in a day in a blink of an eye. You've got a lot of big whales, big money that own this stock, that buy this stock, that trade this stock. And they're not afraid to hold this stock either to allow for them shorts to get totally screwed. So with that being said, this could be an immediate short squeeze play. Now, going down here, starting at the $100 strike, this is where I'm basically looking at from here down, showing that it's at a $1 rough estimate, $1.12 premium right now. So it would cost you about $112 to buy one contract, one call option at the $100 strike. Me personally, I am not going to be buying there. I'm going to come all the way down here to the $135 strike and play it quick, fast, and hard. Yes, I know it's way deep out of the money, but again, if I'm right, and this is me and me alone, not financial advice, if I am right, this could seriously, literally print money. 135 can happen like that with this stock. It's happened before. It could happen before the market even opens, and I'm screwed. I can't even play these options. So just keep that in mind. This is going to be a very volatile stock over the course of the next couple days, but it's only going to be a day or two. I would not expect for this to run for very long periods of time. It's going to run up really hard, really fast, and probably crash just as hard, just as fast. So just always keep that in mind when you're looking at these super speculative plays. This one here could be a great gainer, but this is very high risk with very high reward. Also, if you're not interested in playing this one here because it is so expensive, there's another one that you could take a look at, and that is CFVI. That is the Rumble stock, which is also linked to Trump's Truth social media. You could absolutely see a run-up on this as well through that, as sympathy run-up, basically. And again, I've been charting this one as well. As a matter of fact, I've talked about this one on my channel. And you can see I've got some lines of support and resistance on here. And again, like I'm saying, if DWAC runs, CFVI could run as well. It may not happen the same day, though. You might actually have a day between them, or even several trading hours at least between them, before you start seeing CFVI make the major moves like DWAC does. And again, it can absolutely happen. With that being said, I want to go ahead and move on over to the internet and cover more about DWAC here. We're, of course, at Ortex. Ortex showing 100% utilization, and the cost to borrow on this stock is an amazing 216%. The days to cover is just under 1 day, guys. So again, very fast movements. It's a low float stock. It's only got about 38 million in the overall outstanding shares. Current shares on loan is 5.66 million shares, which is almost 20% of the free float. Keep this in mind. This stock has only been available and IPO'd only a couple months ago. So that's pretty insane to show that it's already one of the top short squeeze stocks. Ortex is showing, according to the NASDAQ, 4.39 million shares short interest, which is 13.14% of the free float. And anything over 10% is absolutely crazy short interest. Down here showing the estimated short interest is kind of right on par with that, but we did recently have an update through the NASDAQ. According to Fintel's showing about 1 day to cover as well. Not too much of that information is going to be different. Short squeeze scores currently sitting at 32.51 out of 100, which is 33 out of the 5,500 stocks on this list. There is currently 0 shares to be lent from a leading prime brokerage. And here's the funny thing. That is as of the 16th. It has not been updated in 3 days. Wednesday, Thursday, Friday. No updates at all. That is freaking insane, guys. That right there is telling me there's nothing left. The shorts are in trouble. And you can tell that from right here. They're absolutely trouble. And DWAC has also been on the threshold security list. Now, I don't know exactly how long. It could be close to that 13, 14 day mark. I haven't mapped it out. I do know that they are on it and have been on it for quite some time. All right, so before we get any further, before I end this video, I want to show you guys how to draw up that extension so you can see profit-taking levels if you choose to do so. We're going to do both DWAC and CFVI. Let's start with DWAC because I already have a Fibonacci retracement drawn up. We don't need to go over that right now. Let's go to the 4-hour chart. So this way we could see our full lineup. So what you do for your extension, again, you go up here to the top bars. And this is, of course, on Webull. You find your Fibonacci's, you pull that down, and you look for your extension. A Fibonacci extension has to utilize the same exact marks as your retracement. So you go off your run-up to the top of the run-up, and then from the top of that run-up, well, that didn't work. Delete that one. Do that again. All right, so bottom to top, and then to the bottom of your retracement right there, which was just above the 78% retracement level. Now, as you can see, it traded sideways for quite some time, and it really hasn't made any major movements until recently. But if we scroll on over here, you can see that it's been in that nice, beautiful uptrend. So what we're looking for as of right now, and again, this is your extension, this is your retracement. We're looking for it again. Respect this, bounce off of that 200 line that we've seen earlier, and get back above the 50% retracement level. Now, if you're buying into the stock, these are levels you can look for to take profits. If you're buying into options, these are levels you can look for it to bounce off of to, again, take profits. You can expect for it to be pushed down significantly, and that may actually drive down the volatility and the open interest overall. So, because that's where algorithms trade at. That's where they shut their contracts down as well. So just always keep that in mind. So anyway, that is the theory behind the extension. It gives you profit-taking levels. And as you can see, these would be the levels that I would be looking for all the way up. And if you keep scrolling, they keep going because there's an unlimited upside and the algorithms know that, and they will trade off of these numbers. And if a short squeeze starts happening on DWAC, I definitely think these levels are totally realistic. Let's just get that straight. These $762 levels at the 423% level, totally realistic. Small float, heavily shorted, with a ton of big whales that are willing to hold this thing for as long as it takes. All right, so moving on so we can see the full process, CFVI. Okay, so CFVI, here we are. We're going to do this run up here. Fibonacci, bottom, top, extension goes to this one, and there it is. And again, as you can see, it holds key levels of the support and resistance right there. And again, if you're going to play CFVI as a sympathy play, if you look right down here, we're currently sitting at those same levels like DWAC would be at, right down in this area. You're looking for it to respect, bounce above this line here, and then go. And just utilize the Fibonacci extension as levels of support and resistance, levels of profit-taking levels. If it's going to bounce off of this level here and you're comfortable, pull out. Me personally, I take profits in increments, small chunks at a time. I buy into a position with stock, and I'll take a 16th off here, a 16th off there, a 16th off there. If I'm doing it in options, I'll cash out half my options at my first level, and I'll ride them all the way up on the way up, taking maybe one contract at a time off as it goes up. All right, so with that being said, that's all I got for you guys today. Like, subscribe, make sure you do what you got to do to get these videos out to your friends and family. I try to give you as much education as I can in each individual video. With that being said, that's all I got. Peace.